Now that the ghost month is over, has the market bottomed? Let's look at some stocks I've started to accumulate. My name is Den Slim and welcome to another episode of Monday Market Outlook. Let's first look at some updates on a couple of issues that we're tracking. The Philippines is back on the driver's seat as we have become the top importer of rice, overtaking China this 2023. Congratulations! But all this while rice prices are at its highest. Thailand long grain rice is the benchmark for global rice prices, and look at that steep climb, especially during the start of the year. Next, we have US oil breaking out of its $90 a barrel resistance zone we identified last week. Now, if we look at the charts, WTI crude had a convincing breakout of the $90 resistance to end the week at $91.17. US oil may consolidate at 90 before making another run to 93.66. So be ready for further inflationary pressures in the coming months. But sometimes this bad news is actually something that we can trade. So if you were able to trade the breakout of 83.43 here, you would have made an almost 10% gain unleveraged, for oil. So congratulations if you did. So sometimes don't let bad news scare you out of a good trade. Now let's look at what's affecting US oil prices. So we have increased demand for oil, especially in China, where oil imports are at their second highest ever. Now, on the other side of the coin, we have the supply side. Oil inventories are also currently at critical levels with only 38 days supply. This is the lowest level since 1991. And this is expected to worsen in the coming months, especially for Q4. So fundamentally, we have increased demand and decreased supply. So by the looks of it, oil prices may continue to go up until the end of the year. Now, lastly, we have the peso-dollar exchange currently consolidating at 56.79, but could potentially break out of 57. Let's look at some developments and why this is the case. Now, while CPI numbers came in within expectations, we can see two different stories here. We have core CPI, which is steadily going down and is currently at 4.3. But CPI numbers, which now includes food and energy inflation, shows a sharp uptick to 3.7. Now, on a month-on-month basis, this is a 0.6 increase in the CPI numbers, which is the highest in 14 months. So the main driver for CPI inflation is gas prices. Next, the producer price index also came in last week, climbing 0.7% month-on-month. The PPI is a forward indicator, so as manufacturers' costs increase, you can expect that when these goods reach retailers, this could mean higher inflation in the next few months. So all of these inflationary pressures are also pushing the US government bonds up. So we have the 2-year bond up to 5%, and remember that anything above 5.1% could spell trouble for the markets. We have the 10-year bonds also sharply up from last week. The 20-year bonds also sharply up from last week. So what does this mean when US government bonds go up? So this also means that the US dollar is also going up, and we can see how the US dollar has rallied after it retraced to 104.54. Even as the ECB has raised interest by another 25 basis points, we can see that in just 14 months from record low to record high, this did nothing for the euro as it is still depreciating against the dollar. So we have a potentially stronger dollar ahead. And going back to the peso, where do you think the peso could go? Up or down, right? It's most likely going to go up. So while the US is only worried about gas prices, the Philippines, on the other hand, has to deal with a triple threat. So we have rice prices at all-time highs. We have gas prices going up. We have the peso depreciating possibly to new lows this year. So which is why somehow the PSEI chart can't get any momentum going. Now let's go to the PSEI charts. The stock market ended the week below our 6150 critical level. Fortunately, or unfortunately, the drawdown was a mark on close last Friday, so expect the market to open Monday at around 6160 or 6150, back within our support zone. Now, as expected, the FTSE rebalancing, which was finalized last Friday, caused the same chart pattern here. So hopefully we can move past all the rebalancing price action and see where the market really wants to go. Now, if you go around the malls, you have all the Christmas decorations already out. So maybe we could also do some early Christmas stock shopping. So I did some shopping last week, and I'll be looking into more shopping in the next few weeks to slowly accumulate on some of the stocks. Now let's check out some stocks that may be on sale this week. BDO at 129. Very interesting. Why is BDO falling? I don't know. They say a gasoline company may default on their loan, as their loan is close to maturity and may default, and BDO has the highest exposure to this gasoline company. But in BDO's earnings call, they already said that they have already factored this in, and that the exposure wasn't as big as to affect their bottom line. So again, I'm not sure what's causing the drawdown on BDO. I picked up some shares, though the rejection weeks here are a bit concerning, but we will see how BDO reacts at 129. But I'm currently not aggressive with banking stocks. For BPI, swing trade possibility here went in at 109. I've set an alert at 106, and see if it shows further weakness, I could put a stop loss here at 104. As I've said several episodes back, that as interest rates have peaked, there might not be much more upside to banking stocks. Maybe this could be a last push for 2023. So next we have Aboitiz Power. Look at that drawdown, no? Because of the FTSE rebalancing, as it was deleted from the FTSE index. Also, the public float of Aboitiz Power is currently at 20.5%, which is dangerously low considering that the float requirements to be in the index is 20%. So as AP is planning several buybacks, it could put them below the requirement, and this could drop them from the index. Also, WESM prices have steadily gone down from 6 pesos to its current rate at 4 pesos 12 centavos. I picked up some shares, but again, not too aggressive on AP just yet. SEC and DMC is currently on a rally, up around 20% from its breakout here. I've accumulated at the early part of the year. I could take profit at 35 or 35.50, and as you can see, I've set an alert here. People in some groups have asked if buying before the dividend X date, getting the dividend, then selling after the X date is a good way to earn easy money. Does this work? Well, you can certainly try, but then you'd probably know soon enough that this can probably be a not such a good idea, right? Because if we look at the chart here, every time the X date comes, there's a big gap down on the price action. Here, X date, gap down, X date, gap down. We have an X date here and a gap down. But I'm sure the dividend here not as big as this one. See, 350, and here's 150. So you can look at your stocks and see the price action, if it makes sense for you to buy before and then sell after X date. But what I do, and what you could probably consider doing, is actually buying after X date when the stock capitulates, and then selling before the X date, totally foregoing the dividend. So while I'm a long-term hold on the likes of AREIT and SCC, sometimes I do take a position on these stocks just to trade it in between X dates. So what I'll do is, after the X date, when it draws down, I will wait for a couple of weeks until the stock bottoms out, buy at the bottom, and then sell a few days before the X date. This is a 56% gain. than just buying before and then selling after. It doesn't make sense. You're buying at 41, it gives you a 10% dividend, and then the next day it goes down 10%. So you just cancel out the gain. But if you buy a couple of weeks after X date, here X date, it capitulates. 2 weeks after, you buy here, and then you sell before the X date here, you get a 13% gain. So what happened here? Dividend X date, the stock goes down. I bought here. 2 weeks after, it went down. I bought here, and then we're currently up what? We're currently up 26%. Now, if we sell at 35, we could be up by 28%, which actually makes a lot more sense. So, something to consider. Next stock, we have AC. I bought more AC. I bought some AC shares. You see here, as you can see, there's an alert here at 590. So after it bounced back here, I've been slowly buying some AC shares at 619. AC is so cheap. SM, looking at how it reacts to the 800 level. As you see, I've set an alert at 801. Let's see how it reacts at this level. And it could probably be a good entry for SM. But again, I've marked 760 as the best entry point for SM. So I got more A-REIT shares. As mentioned, 32 is a good buy zone for me. This puts the yield at 6.5%. For C-REIT, my alert level is 2.51. Again, we have the dividend X date and then the drawdown. I'll wait a few more days and see if it can hit 251, and then we're going to get more. Right? So some stocks I've also started to accumulate. We have Ayala Land here. I put an alert at 27 and another one at 25.90. So again, if interest rates have peaked, property sector may start to see more upside. Now, going back to the PSEI, is this the bottom? Now, we don't know. Could it go lower? Yes, it can, definitely. So next week, as we await the Fed rate hike decision on September 20, we'll also have the BSP meeting on September 21. So will the threat of a further weakening of the peso push the BSP to raise rates? Probably another sideways movement from the PSEI for this week as we await these decisions. So on to the global markets. Let's look at the S&P 500. As expected, it came down to our maximum pain level at 446. The quad witching event didn't disappoint. Could this be a bearish engulfing candle which may push the markets down to 4,400 or maybe 4,330? Now, if we look at the options expirations, last week we came down exactly to max pain at 446. Right now, the markets are moving more in sync with historical trends and the options markets more than the news. If we look at next week's options expirations, although this is a minor options expirations day, we can see max pain at 448 with a call wall at 455 and a put wall at 444. Now, economic numbers that came in last week shows a couple of things. No? So we could see inflation inching up, but this may not be a big concern as this was only brought about by gas prices, and raising interest rates doesn't really help with that. But retail sales remain strong and the labor market remains strong. So the Fed may still come out with hawkish comments this week that could push the markets down. So let's go back to the 70-year historical September performance and add the S&P 500 movement so far this September. We could be here or we could be here. So let's check out the past options expirations movement for the S&P 500. In the last 11 years, the market was down 10 times on expirations day. This year was no exception as the S&P 500 dropped 1.22%. Now, looking beyond options expirations day, in the last 50 years, we can see that 10 days before options expirations, we are generally up 34 versus 16. But the week after options expirations, we were mostly down by an average of 0.85%, 17 to 33. So as the market is almost sure that the Fed will keep rates at current levels, and the market has already priced this in, a hawkish statement from J. Powell may be the event that could push the markets down. But for now, if we go back to the S&P 500, history is history, right? But for now, there's no trend reversal yet, and price action is still king. This trend line is still intact. If we draw a Fibonacci retracement, we can see that we are still within the 61.8 and 38 Fib zone. Now, if it breaks down from this trend line and from the 38 zone, we could see the next support at 4,400. So we'll see. But that's it for this week. If you found this episode useful, please like the video, subscribe to the channel for more updates, and as usual, good luck on your trades. Please manage your risks accordingly, and I'll see you again next week. Bye-bye.